Welcome back. You're still tuned into Business Lunch, and we're all waiting for SBI's numbers, which should be out any time now. We have Abhishek here to really break down what we can expect this time around from the company. Abhishek.
Well, to begin with, watch out for the net interest margin. It's been a talking point across lenders. So, YOY, the NII growth as per our poll is one of the best that you are seeing in last 28 quarters. As per analyst estimate like Morgan Stanley, they expect a 5 basis point decline in net interest margin. But on the other hand, large banks are losing anywhere between 10 basis point to 20 basis point on a sequential basis in net interest margin. Kotak Securities estimates loan growth of around 16% YOY and 2% quarter on quarter. Morgan Stanley estimates gross slippage of about 12,500 crores. Now, again, Kotak Securities estimates operating profit growth of about 111% YOY and 9% sequentially, largely driven by the treasury portfolio. So, asset quality expected to remain stable, and management outlook with respect to loan growth going ahead will be seen closely. Stress assets, they form about 0.84% of the book. How that will move will be seen closely. Our poll suggests NII growth of 30.6% YOY and about 0.9% sequentially. We are working with a profit growth of 161% YOY and a decline of a little more than 5% on a sequential basis. Back to you.
Right. So, Abhishek, I think SBI's numbers just about to flash. But what are the most important? Okay, SBI net profit at 16,884 crore rupees. That is a beat compared to the CNBC-TV18 poll. We'll look out for more numbers. But as Abhishek was pointing out, NIMs are expected to decline on a QOQ basis. Let's take a look at 16,884 crore rupees is the net profit, which is higher compared to the poll. NII comes at 38,904 crore rupees, which is slightly lower, to about 2,000 odd crore rupees lower than the CNBC TV18 poll. So on NII front, the company has posted, SBI has posted lower than expected amount, and on net profit, it is a beat. So take a look at those numbers. We are waiting and watching out for more numbers coming in from SBI. And whenever Abhishek is ready to give the first reaction on how the numbers are looking, of course, the management commentary on growth will be closely tracked at this particular point of time. And at 2:15, the management of SBI will be talking 16,884 crore rupees versus estimated 15,838 crore rupees. Gross NPA. For the asset outlook picture, well, 2.76% is the gross NPA. Net NPA stands at 0.71% versus 0.67% on a QOQ basis. So the gross NPA full picture in terms of numbers is 91,327 crore rupees. On a QOQ basis, the gross NPA figure has increased. So the asset quality has slightly worsened. Net NPA stands at over 22,000 crore rupees, which is also worsened compared to the last quarter for SBI. So let's focus on NII being lower than the expected lines, net profit being higher than what CNBC TV18 poll suggested. Gross NPA stands at 2.76% versus 2.78% on a QOQ basis, and on a net NPA front as well, there is a decline in the asset quality provisions at 2,501 crore rupees coming in for the company. Prakash Diwan is right here to take us through the first reactions on these numbers. Prakash, what do you make of SBI's performance for this particular quarter?
So, Disha, unfortunately, our market is getting so micro on some of these numbers on a Q-on-Q basis. But I won't find fault with the fact that there has been a bit of softness in the net interest income, which was on anticipated lines. And, of course, there could be some hair splitting around the NPA quality, the quality of assets deteriorating a bit. But, it's an environment where all, especially the larger banks, are evolving at such in such a structural way that these things will happen. So I'm quite okay with the fact that SBI on such a large balance sheet is still able to maintain this kind of earnings, and this would continue as things look up and things get more decisive in the economy, especially in terms of demand and capital expansion that's underway. Pretty okay
That's
numbers.
Right.
I wouldn't get disappointed with this, though there are some offs. Some metrics which probably seem off, but
Right.
is absolutely in line with expectations.
All right, in line but disappointing on some fronts, Prakash Diwan, as you said, that net interest income is slightly softer and asset quality has worsened a slight bit. But Abhishek Kothari is ready with his numbers. He's been pouring on these numbers. Abhishek, what is the first reaction? What's your analysis of SBI's numbers?
Weak set of numbers. So to begin with, cost of funds have weighed on the NII front. If you take a look, the deposit growth is about 2.5% quarter on quarter, 2.43% to be more precise. But the interest income is up 8.6% quarter on quarter. So the cost of funds have actually weighed in. The loan growth is pretty dismal at about 1.1% quarter on quarter and about 14.9% YOY. Analysts were expecting a healthy growth of around 16% YOY and 2% quarter on quarter. So the loan growth is dismal, and that is why you're not seeing that translating on the yield side. So operationally, it looks like a weak quarter. What has driven the PAT much ahead of our poll is the lower provisions. So provisions have declined by 43% YOY and about 24.5% sequentially. So the lower provision has aided the PAT this time around. So on NII, it's a 4.5% miss on our poll. Our poll was about 40,737 crores. That has come in at 38,905 crore. The PAT has come in at 16,884 crore. Our poll was about 15,838 crore. So it's a 6.6% beat that you are seeing on the profitability front. On asset quality, take it with a pinch of salt. We all know in Q1, agri portfolio has been slipping for majority of the lenders. So take it with a pinch of salt that, gross NPA in absolute value has increased by 0.44% and net NPA has increased by 7%, which looks like a marginal pressure might have come on the provision coverage ratio. So as per my calculation, around 100-150 basis point is the pressure that could have come on provision coverage ratio, but it remains healthy at around 75%. So business momentum, deposit growth of 12% YOY and 2.5% sequentially, that has picked up. Deposit momentum has picked up for all the banks over the last couple of months, or let's say 1 or 2 quarters. Advances growth, now that's a disappointing one at 14.9% YOY when industry growth was around 15-16%, and sequentially the loan growth is at just 1.1%. Back to you.
Abhishek, thank you very much for that very comprehensive study of the Q1 numbers that have come through. And the stock has also fallen. It's not like the stock was going into its earnings very strong as well. It's down around 1% now. But let's also get in some more reactions. We have Rahul Malani joining us. He's equity research analyst at Sharekhan. Rahul, thanks for joining us today. We were just going through the numbers. Like Abhishek is pointing out, seems to be a lot more misses this time around. Has that been your reading as well of the numbers that we just got?
So, hi, good afternoon. First of all, overall, on the basis of net interest income and operating profit, the numbers are below our estimates, mainly due to the lower NIMs. And apart from that, there is a positive surprise from the lower credit cost, which has led to the earnings beat of around 7%, because if you look at the credit cost, is substantially lower. In terms of loan growth also, we were expecting around 16.5% on YY basis. It has come in around 15%. And so we would look out for the management commentary on the loan growth outlook, because they had already excess liquidity in terms of deposits, also in terms of SLR reserves of around 4 lakh crores, and they had a healthy lower in terms of CD ratio was also on the lower part, and deposit growth has been maintained healthy. But why did the loan growth has come a bit lower below the system growth and our estimates in terms of
Rahul, as you said.
Also.
Yeah, one second. Sorry to interrupt. As you said, CD ratio was low. As per calculation, it is at 71% when compared to 72% in the previous quarter. Now, just rough calculation shows that, the net interest margin might have declined by 20 to 25 basis points. That's pretty huge for a balance sheet of SBI. And if you, what were you penciling in with respect to net interest margin for the current quarter versus previous quarter?
So we were penciling in around 10 basis point margin decline on a sequential basis, because in the last quarter they had indicated that they would be taking some hike in the term deposits, but saving deposits rate have been stable. So greater than around 20 to 25 basis point is a bit surprise on that.
Okay. We also have Prakash Diwan. Prakash, what do you make of the numbers? Lower provisions have actually aided the PAT to beat our poll, while the NII growth is actually dismal and it is on the weaker side when compared to our poll as well. Your take on the same?
Yes, so I do agree. some of these key metrics seem to be, not so favorable, particularly the net interest income coming down. There was expectation, Abhishek, as you rightly said, on the softness, but it's been probably a bit sharper. But also realize that this is in the backdrop of a quarter that has been very inconsistent with any kind of a credit demand. So it's across the board. And I think SBI will probably benefit more because it does not need to additionally, make more incremental efforts to grow its business on the priority sector and some of the rural-facing businesses, sector. But it will catch up with that. So I would expect the stock to react negatively on these numbers, while the numbers probably seem off the estimates. But I don't see anything drastically negative about it. And the commentary of the management on the forward, earnings trajectory, credit growth trajectory could probably make things look even better.
So, Prakash, what you're telling is that the numbers might have been priced in, because going into results also, from this week itself, you saw 20-25 rupees decline in the stock price as well, right?
Absolutely. So there was absolutely no expectations which were building up. This disappointment or whatever people would want to call these numbers around, it's something which is not going to push the stock further down. And in fact, anything which is forward-looking and positive could only take the stock higher.
Okay. We also have Hemang Jani with us. Hemang, what do you make of the numbers? As I mentioned before, and I'm again repeating myself, the lower provisions this time around by 43% YOY and about 24.5% decline has actually aided the PAT this time around. And the NI is a big miss on our poll as well. Your take on SBI's numbers?
So thank you so much for having me. Yes, the NII front, there is some amount of disappointment. The consensus expectations were about 412 billion rupees, and the actual number is much lower than that. Also, the fact that when many other retail-focused and corporate, focused banks are showing very strong loan growth, the loan growth that the market was expecting was about 16%. The actual growth is about 14%. And on a quarter-on-quarter basis, this is much lower. So, this is something that one will really have to figure out as to what has led to slightly muted loan growth. Also, in terms of slippages, the market was expecting around 12,500 crore kind of a number, gross slippages part. So the actual slippages, that number I do not have, but I think there is some degree of disappointment over there. So on an overall basis, given the way the quarter has panned out, given the way some of the banks have already reported the numbers, these numbers are, slightly muted. And the net profit growth is largely because of the lower provisioning, which is not a great sign. I think in terms of operating parameters, there is some amount of disappointment. That's how I look at it.
All right. So some amount of disappointment. Very quickly, Hemang, does it call for a re-rating of this particular counter? Was everything priced in terms of the expectations? Because the stock has taken a drudging of about 1.5% after the results came out. Does it call for a re-rating?
I don't think there is a case for too much of a negative reaction in the stock, because already, we have seen a little bit of underperformance, come through. And depending upon how, the con call pans out, what kind of details and the outlook that we get, on the NIM front, on the loan front, I think that would basically decide how the stock price reacts.
All right. Thank you so much, Hemang, Prakash, as well as Rahul, and also Abhishek for giving the entire exhaustive analysis of SBI's numbers. As per Abhishek Kothari, weak set of numbers, provisions have aided net profit, net interest income has been on the lower side, and loan growth has been low. Our capital allocation framework is unchanged. That's an important statement also coming in from Mahindra and Mahindra. This could be a reaction to a lot of questions being asked on the 3.53% stake that Mahindra and Mahindra had bought in RBL Bank. So do not expect to invest further. Our capital allocation framework is unchanged, is what they're saying, and we are waiting for more comments coming in. Do not expect to invest more unless we see compelling strategic value. So this is one story that we had broken right here on CNBC TV18, that Mahindra and Mahindra could be looking at strategic intent. So if there is no strategic intent or value, there is no compelling reason to buy, is what they are stating. Hope this puts some clarity into their RBL Bank strategy when it comes to Mahindra and Mahindra as a company and as a stock. With that, it's a wrap on Business Lunch, but Mid-Cap Radar comes up next. Lots of news flow and lots of results to digest, so stay tuned to CNBC TV18.